50 to 55 is break even. The problem is it always has to get cheap to shut it off. Now we saw the low ever was in 20, it was minus 40. So I'm still looking for $40 a barrel. Been way too early on that one, but that's just how the cycles work. The key thing that's happening now is we're seeing significant deleveraging in markets that were way over leveraged. And people know how that happens. Those of us who've been trading for more than 20, 30 years. And that to me is what's happening. The key thing that really struck me yesterday was significant deleveraging in the US bond market. That 10-year note, which was dropped down to around 390, 380 or so recently, now pumped up to around 450.
Americans are paying about 3 times more for their solar modules than the rest of the citizens of the world. And the basic story there is that China overbuilt its manufacturing capacity to make solar modules. They've been exporting them to the world, but the overbuild crashed the price. So global price is now sub 10 cents a watt. First Solar, they're still managing to sell theirs for about 30 cents a watt.
Genetically modified seeds. But that's the key thing about what's happening. This is a wonderful thing about human nature. We have superabundance because we create too much. So the equities, which is your space, like you mentioned yesterday about First Solar being the high cost producer, well, they're going to have to fix that. And there's ways to fix that. And they should be motivated to do that. But it's the way it's happening. That's the key thing that struck me about crude oil when it pumped up to 100. A lot of analysts miss what was happening with the technologies. By the way, from this part of the world, we get a decent amount of our gasoline from ethanol.
Good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. Today, it's just going to be Mike McGlone and I. We are here live at Bloomberg's Farm, Food, and Fuel Summit in Indianapolis. And so we've had a very interesting discussion over the last day. As you can imagine, we've heard numerous thoughts on tariffs and the sort of latest read of the landscape on where energy and commodities are at. So Mike, let's come to you right out of the gate here. Just looking at the screen, WTI is below 60 a barrel, Brent's hovering right at 60. So what do you make of where we're at today, just in terms of the general macro commodity landscape?
It's a question of how low the low price cure is going to be. The seeds for crude oil to be at 57 right now, this WTI was when it pumped above 100. That's nothing new, but it's happening in an environment where the world technology is moving so fast. I mean, it just incentivized more production. It incentivized the demand. And now we're just going back to low price cure. So the good news about this level is we're finally near break even in the US. The rule about commodities, break even, you always go back to a break even cost. It's how you define it where it is. So 50 to 55 is break even. The problem is it always has to get cheap to shut it off. Now we saw the low ever was in 20, it was minus 40. So I'm still looking for $40 a barrel. Been way too early on that one, but that's just how the cycles work. The key thing that's happening now is we're seeing significant deleveraging in markets that were way over leveraged. And people know how that happens. Those of us who've been trading for more than 20, 30 years. And that to me is what's happening. The key thing that really struck me yesterday was significant deleveraging in the US bond market. That 10-year note, which was dropped down to around 390, 380 or so recently, now pumped up to around 450. Completely stopping people out. That's where I really started in the trading pits in Chicago, which isn't too far from here. So coming back here is heartland. I mean, my family's here. This is people I really know. I used to know very well. But to me, that's the key thing is happening is we're deleveraging markets. We're in a significant bear market in the stock market. Bear markets, the lesson I learned at a hedge fund is bear markets will take money from everyone. Bond market was a good example of that yesterday. Gold was recently. Cryptocurrencies just getting hammered. Questions, where does it stop and how do you trade it? The good news is it's a tremendous trading environment. For those of us who came from the more tactically oriented, like in the trading pits where everything's leveraged and all you want is movement and just hope you get stopped out efficiently when you're wrong and get on the right trade when you're right. Now, to me, it's about what's the right trade. So I think the thing to look forward to is we're going to have a lot of hopium in a bull market being over in the stock market. Yesterday was only one day. Typically, it takes a couple of weeks for people to believe like it's not a bear market, and then you go back down. So that's the key thing. Gina Martin Adams pointed out yesterday she's expecting a potential another 18% lower in the stock market. Tide's going up means everything. Significant deflationary forces kicking in, most notably in the rest of the world. Look at China. The Chinese government 10-year note yields are on 162, just like JGBs were in the 90s. Those of us who traded it remember seeing this happen. And then we rope over to what's happening in energies. Crude oil, it's getting cheap. The key sore thumb still remains natural gas. It was able to pump above 4. Really cold winter. Are we going to get a cold winter 2 years in a row? Remember, what's the trend in global warming? And then we have this government's very motivated in lower energy prices. So I think the key sore thumb in energy is crude oil. Crude oil goes to 40, and then we'll see how it happens. I don't think it gets much above maybe 70, maybe 65, but it needs some kind of shock. Otherwise, the trend's lower. Natural gas gets down to 2. The key point is that's what these markets have been doing for decades. Literally get too expensive and they go back down. Now they have a good reason. So a key thing I enjoyed yesterday about presenting is I presented a lot of stuff I pointed out last year. It's just, you see these trends happening in commodities. When you see gold beating everything and continue to beat everything, that's the warning flag. And so now I can say, okay, now we have the most worthy reason ever for what I think is normal reversion. The U.S. equity market was way too expensive. It's going back down, maybe 1.5 to GDP, maybe 1 times GDP, what it used to. But in terms of commodities, gold is a key thing today. Back up above 3,000, had one little dip below it. I still look at 2,800 as good support, but gold's continued in a bull market. And then the other major commodities, here's a unique thing I'll end with. I found out it was really unique yesterday. Everything was down, even bond traders, treasuries, even, 2-year note people even lost money. The only things that were up were corn, soybeans, and wheat. And we're in the land of corn, soybeans, and wheat.
Fantastic. Yeah, for anyone who hasn't seen it, if you look at our BI Equity Daily that comes out, so that Gina Martin Adams piece is the lead piece of research there for today. So make sure to check that out. And it does seem like everyone's got a pretty bearish sentiment right here at the moment. And you've just made the case that it seems to all be correlated. So, what is the safe haven in your mind? Is it the ags or is it other things?
It's not Bitcoin. What the Bitcoin people told you, it trades 3 times the volatility of gold and S&P 500. People are learning that the hard way. So I want to point out that I want to go there first. I got to your question, but I got lucky enough to make the call in 2020, October, when Bitcoin was at 10,000, it was just going to add a 0 and get to 100,000 by 2025. They did that. Now I'm calling, that was profound. New highs. Now I'm calling for simple mean reversion back to 10,000. So why am I saying that? Because that means classic example of biggest ETF launch in history, just put it in the peak. All those ETF investors are learning the hard way. They bought leverage beta. And now it's tilting over to gold. Gold's a significant inflow. So I still think gold's going to be one of the best performers. And I do think, obviously, short-end treasuries, one thing that's really struck me lately, I've been wrong on, and I started here in the trading pits, trading long bonds, is I still think U.S. Treasury long bonds are going to just do what they did in China, go towards below 2%. Right now, they're pushing almost 5%. Some people say, yeah, McGlone, you've been wrong. Like, I have been wrong. If I was a trader, I might have been stopped out. Leverage guys are getting stopped out today. But to me, that's the ultimate thing. We're heading towards the normal lessons of deflation after inflation. And you never get deflation without inflation. We had it, and now we have the biggest trigger in history to do that. So key thing I want to point out about what's happened in tariffs. There was one thing after my presentation, they asked about tariffs right away, because I did not directly address them. Now there's so much in the space, is what's happening with tariffs. The lesson I learned in the 90s, I got my MBA at DePaul University in Chicago. And the lesson I learned getting an MBA in the 90s, everybody got their MBA in the 90s, was, free trade is great. It's the best way to do it, right? The lesson I learned in the trading pits, being on the phones with customers, some of the best traders on the planet. I was never in the pits. I was on the phones executing. Was, everybody in the world wants free trade as long as they can run exports, net exports with the U.S. That's being flipped off. Love them or hate them. This is a significant paradigm shift in the world. And it's happening. It's 100-year, highest tariffs in 100 years. And we have the U.S. stock market the most expensive in 100 years, like 1929, like Japan in 1989. So I think after we're going to get some discombobulation. We've already a little big dip down in gold. To me, the number one safe haven will end up being U.S. Treasuries at some point. But they're making it really difficult for people like me who've been looking for this for almost 2 years. And that's usually how it works. You got to make it as difficult as possible. Then you go to the underlying fundamentals. Yeah, so people are deleveraging, but there's global deflation accelerating. Look at China, look at Germany, look at Europe, look at Canada. Everybody's heading towards recession. And then they're facing these tariffs. So, but here's the key thing. By the time we get the midterms, the average price of gasoline in this country, I think, is going to go to 2. It's 3 now. Average price of diesel, $2.50. Average mortgage rate is going to go closer to 4. These are calls. Inflation will be, CPI might probably be negative. Unfortunately, the stock market might have corrected 50%, but the key thing to remember is what Scott Bessent pointed out in his interview with Tucker Carlson. Top 10% of this country own 80% equities. Most of those people didn't vote for Mr. Trump. But where we are in the heartland, which is where I'm from, and I can get a sense from my family, these kind of people voted for Trump. They're the lower 50 percentile. They don't care about the stock market as much. But if they can drive their pickup truck and it costs them only $2 for gas, they're happier. As long as they're not losing jobs, and there's massive inflows of investment coming to the heartland. Now, it's not going to be easy. It's going to be discombobulated. But the whole world knows this is kind of a shift back to Main Street.
Yeah, very interesting. And I think you probably just gave us a sense there. But I am monitoring the chat. So for anyone who's got a question, just pop it in and we'll try to address it here. But yeah, the question is, do you think it gets worse before it gets better? I feel like you already answered that, but give us a sense of, what signals are you looking for when you'd want to sort of effectively enter the market?
I don't even think about it right now. Honestly, this is a market where that's the wrong conversation. That's a problem. This is always happens. I remember in '99, I was early, 2008, way early. Think about if you're tactically orientated, when you feel like it's over and there's a decent bounce, you should be looking what's the most important thing to do for the macro big picture. So I'll point out little facts. The VIX volatility index, the 200-day moving average just bounced bottom from the lowest level since, if you take out the T-bill, which is what I did in 2007, that gave me the signal. My best trading year was 2008, only because I was hedging everything. And I don't trade anymore. That's a good thing about intelligence. We're not allowed to trade, which thank God it did me a favor. I was addicted. But the key thing is look for opportunities. Number one, from trading, things will get cheap and they'll bounce. That's great if you're a trader. But from the macro big picture, people are overweight long assets like the Bloomberg Galaxy Crypto Index, the 200-day moving average has just started to roll over. And there's significant fundamental reasons for that to go way down. So to me, that's the tip of the iceberg when you have things coins that are jokes worth $20 billion. This is stuff like 1929 and 1999, just getting started. So good indicator for risk assets there. Crude oil, I think most commodities have to get cheap, unfortunately. And that's the thing that's hard here. They all get it. I mean, I've lived through it. I owned a farm. Is unfortunately, you got to get below that cost of production. And right now they're kind of break even. And so we got to kind of do that. Unless you get a drought, all the grain prices are probably going to go lower. But in terms of copper, there's copper, massive classic trade. As a trader, I'm like, yeah, I would have been stopped out on that one because I've been booking out copper. When you hear how people so bullish copper on the macro about electrification, and then look at that Chinese 10-year note. So made a new high at 537. I think it's going back to 3. That's not profound. If you look at the last 20 years of copper trading, 3 is the mean. It's the highest volume price. And those of us used to watch Peter Stoudemire's market profile. So those kind of things, and I think, okay, so the end game. It's logical to expect a normal correction in S&P 500 towards 4,000. The one thing that happened that was the most significant thing we'll look back on is when you add fuel, alcohol to the punch bowl and the party's roaring, which the Fed did by cutting 100 basis points when the stock market was roaring, you accelerate those forces of human nature to get overextended. So now we're just taking it back down, and now we're into that deflationary cycle. Sure, there could be a pivot from tariffs from Trump, but just reading the book, No Trade is Free, Robert Lighthizer, and studying Trump for too many years, living in New York area, he's not going to pivot. And this is things like I talked about decades ago, and so did he. So I think people should forget the false hopes and just trade it rationally, but more tactically, and expect that we're going to get cheap, we're going to get decent deflation, which is normal. Every cycle has it, the price of time, Edward Chancellor. And but the opportunities are going to be great. And by the way, if it doesn't rip your face off once in a while, like bonds did recently, something's wrong.
Yeah, fascinating. So one of the things that I think, we had a panel yesterday where we were talking with our colleague Vince Piazza. He was going to try to join us here, but he's actually booked here this time. He's doing a talk right now. And part of our discussion, we talked a lot about the role of technology in markets generally, right? So the energy transition is sort of a technology story. The AI, clearly a technology story. So I'm curious, based on kind of how you think about the market and your read of some of the discussion here, because I feel like tariffs have been the number one discussion, but I feel like the vibe of the conference, the second thing you hear almost everyone talking about is the role of technology, specifically in agriculture, given where we're at. But
Yeah.
how do you think technology plays into commodity markets
I'm,
over
I'm
the
glad.
next decade?
I'm glad you went there from an ag standpoint, which is my foundation. I own a farm. And remember, agriculture is the essence of all the classic economics of supply and demand and price, because you can bring on that supply in a year. And that's what's happened. We had the big pump in price. Brazil just massively improves their production of everything. And now everybody's suffering in terms of prices, but the producers are making money. So the key thing I enjoy about being here is I went to just a month ago, the all-day ag outlook in Covington, Illinois. It's in Indiana, middle of nowhere. But the key thing that I hear about all my friends and people I know in conferences, the technology is moving so fast. Genetically modified seeds. But that's the key thing about what's happening. This is a wonderful thing about human nature. We have superabundance because we create too much. So the equities, which is your space, like you mentioned yesterday about First Solar being the high cost producer, well, they're going to have to fix that. And there's ways to fix that. And they should be motivated to do that. But it's the way it's happening. That's the key thing that struck me about crude oil when it pumped up to 100. A lot of analysts miss what was happening with the technologies. By the way, from this part of the world, we get a decent amount of our gasoline from ethanol. And we have a problem in this country. Our prices are getting hammered, and we have to really increase the use of using grains and things for biofuels. We have to, or also got to write checks to farmers. The farmers don't want checks. They just want to sell at a decent price. So that's happening. So the technology is very much motivated to increase the demand because we can't export as much anymore. China's finding other exporters. And of course, they're not happy with us. But that's the key thing that really struck me was the book of Price of Tomorrow. You've heard me mention it forever. Jeff Booth has really helped me form a lot of my views. When prices give you incentive and the technology is moving so fast, it will. And another book, The Domino Effect, really pointed out to me what's happening with crude oil. Everybody keeps saying shale's going to decline. I'm like, okay, well, what's the next technology? I mean, you drive a Tesla. I've got the poor man's EV, the poor man's Tesla, the Chevy Volt, but my car's 11 years old and it's only had to change on it is tires and brakes. And it does have internal combustion engine, but it doesn't work. It's just that technology is awesome. So where it's going is really your space. And that's where I really appreciate what you're in is because let's put it this way. My wife and we live in a condo in Florida. We want to eventually build a home because we moved out. I want to build it completely energy efficient. The other house I had had solar on it. But when you build in the future, decentralized solar should be part of a normal home. Just looking where the trends are, battery storage is bull market in terms of energy density. Price of a gigawatt of solar panels, your space is bear market in terms of, and technology is improvement. So to me, typical structure in the future that has any demand of energy will be built with solar panels as part of it. Why not? You can store it. I just don't see what stops it. Then I come out here and I see all the wind turbines. I love that, but a lot of people don't like them because it's moving parts and they don't look so great. But it's called harnessing the land with the technology. I know a few farm owners out here who, you lease out the land for the turbines. It's a guaranteed lock-in with an inflation appreciation mode, and you can still plant net on that land. It's just taking advantage of the technology and the value of putting your land to work.
Yeah, I had a couple of conversations with ag folks last night where they're telling me anecdotes about how it was more cost effective to convert some of their farms into solar these days. And they were making more from doing that than they were from the actual farming. So it's going to be an interesting thing to keep an eye on. Price of Tomorrow. I've bought that book. I'm on vacation next week, so we're not doing this call next week. Happy Easter, everyone. So next time we get together, I'm going to have some thoughts on that book, Mike, because I know you bring it out frequently. I appreciate that you mentioned First Solar, and maybe for everyone's benefit here on this call, we didn't get to hear the remarks yesterday. I think it is interesting because you did mention this deflationary cycle that we're in for energy, but I don't think we've sort of quite realized it in the solar space here in America yet. So right now, Americans are paying about 3 times more for their solar modules than the rest of the citizens of the world. And the basic story there is that China overbuilt its manufacturing capacity to make solar modules. They've been exporting them to the world, but the overbuild crashed the price. So global price is now sub 10 cents a watt. First Solar, they're still managing to sell theirs for about 30 cents a watt. And so, when you think about the competitive pressures, right?
Yeah.
Tariffs have protected them, and maybe they will continue to do so for some time. But long-term equilibrium, the company is going to have to probably compete with more of that global price. And by the way, even though First Solar has a great manufacturing presence in the U.S., they've really built it out after passage of the IRA, but they also produce some of their panels in Vietnam and Malaysia. These are some of the countries that were announced just last week that have very high tariffs. And at least that share of their production, which does come into the U.S. By and large, we think that's going to be a margin headwind for the company. So that when you think about the overall stock market, I think a lot of companies have this anecdote of, well, some of their production is overseas or whatever.
Yeah.
You have very few companies that are sort of geographically isolated, vertically integrated, and have no exposure to what's happening in the globe. And so I think a lot of the reaction we're seeing in the market is just sort of company by company looking through and saying, okay, well, the tariffs is going to affect their cost basis. Long term, everything's at play, I suppose. But at least the narrative on First Solar, my sense is that consensus has them at a 47% gross margin for this year, and that probably won't be achieved given the tariffs that are going to come into effect, because unless you think they can pass on the cost of the tariff to their customers, but I doubt they'll be successful in that.
Short term, maybe short term, but that's part of what I think the macros. I had to tee you off of that because I mean, you and I met like about 10 years ago, I think. Remember, you were a journalist. We used to talk about commodities. I'm so impressed that you tilted over to what matters. I mean, this is the most exciting. You got to be with what's happening and where it's going. But it's that overwhelming force of humans harnessing energy, at least. So now we're not, love our government or hate it. The good, we have a self-correcting mechanism in this country that's priceless. If this experiment tariff doesn't work out, poof, it's gone in 4 years. We'll never do it again. If it does, it's going to change the world, and everybody in the rest of the world gets it. Like, okay, so we've been able to depend on the U.S. for post-World War II. So 80 years to export our stuff. Now we can't do that. And by the way, security, no, those Americans don't want to be dying to save our lazy asses anymore. I'm sorry, but I have a son who's in the military and I want him to die for Taiwan. But what's happening, I think, in your space, and it's so important, is where does it stop? And that's my point, is this is a global recession we're getting to. It's going to be painful, but it means severe deflationary forces. And then it's the paradigm shift of why would, I mean, I see, it's simple examples. When you're going down the road and you see those little signs that tell you your speed, and they're completely hooked up to solar and the internet and stuff, there's no electricity. That's where we're going. We don't need, it's just harnessing that energy. But how do we make money? How do we profit from it? And for me, in the meantime, from a commodity standpoint, it means traditional fossil fuels go down. They're facing a perfect storm. Technology's creating more supply and reducing demand, and we haven't reached the point to shut it off the supply.
Yeah, and for anyone who doesn't follow what's happening in the power space, the vast majority of new capacity additions, whether you look at the U.S. or globally, is wind and solar, but primarily solar. Battery storage is just taking off as well. And so if you look at the data, the market is sending a pretty clear signal in terms of, here are the types of things that are getting added. And I find, some folks may tend to push back and say, well, that's irrational. But, we installed globally 600 gigawatts of solar last year. That's about half of the existing capacity for all power plants in the U.S.
Yeah.
These are staggering numbers to think about. And despite even some of the recessionary headwinds and everything, the fundamental demand growth story for solar still appears to be intact. And part of it is because it's just the fastest thing that you can add to the grid. You need an electron, you want a cheap electron, and you want it fast. You probably are going to do solar. Gas and other things are great if you have existing gas power plants. As Vince always likes to point out, they're running at higher capacity factors. So I do think we're in this sort of interesting world right now where, solar and gas are more or less frenemies. They pair quite well together, and they will for some time.
Well, you know what some of our audience are thinking right now. Well, what are you going to do when the sun don't shine? Yeah, and in winter. I mean, the experience of having installed solar in my house was awesome. I understand it so well by having run it. And it's great on this time of year, March, April, May, when you're actually producing more than you use and you get a little credit, and then you take that back in the summer when you use an air conditioning. But the storage, obviously, and to work that with to have it coexist with natural gas. But the key thing is you use less and less than that natural gas every day. You got to have it for the backup, and every day that goes by, we can store more and more of that solar more efficiently and get more. And then there's, of course, but that's the key thing that I think the previous administration just tilted a little too far one way. At least now I think, okay, it's just let's harness everything like they do in Texas and make sure it's cost effective and safe. I mean, there's such thing as burning coal safely. Not a big fan. Certainly our boss isn't, but there's ways to do it. But it's harnessing that energy. And I always like to say when there's so many people so fond, I love renewables, but when grandma's freezing in her cabin, you got to have, sometimes it's just nice to throw in a piece of wood and turn on that boiler that uses heating oil. It just it's part of the human condition. It's lifted us up, fossil fuels, but we're slowly transitioning away.
Yeah, there was a big announcement just yesterday afternoon on coal and using it to power AI data centers from the administration. I'm pretty skeptical that we'll see much of that really unfold. Part of the issue there really is that the hyperscalers, the Amazons, the Googles, the Microsofts of this world, we're probably going to be pretty shy about using coal to power any of their data centers, but let's see. It's certainly an interesting idea. And so one last question before we wrap up, Mike, and just the last pillar. So, tariffs, technology, and then I think the other piece that I've heard a lot about is non-tariff related policy. So there's a lot of government intervention or support, however you want to describe it, subsidies that enter into wind and solar, the Inflation Reduction Act, but the biofuel space also has a lot of support effectively from the government. So, what's your sense on that in terms of how it plays into the biofuel market, right? Because I don't know that, what's the stat? Is it 50% of our corn goes into biofuel? 40%?
It's about a third for ethanol.
Yeah.
The key thing is go there. I'm glad you did, because that really matters here. First of all, let's point out the facts of history. When people say, why are we using food for fuel? Before the invention of the Model T, a big portion of our grains or land in this country was used for animal feed, for transportation fuel. It just was, a different form. Now the thing is, we have a problem. Every country in the world subsidizes their agriculture markets. And this one we have one problem is we're creating more with less every day. I mean, the average, we create 181 bushels per acre in this country of corn. 50 years ago, and when we had the great grain robbery in the 70s, it was 90. And that's full market in production. But we have to find something to keep prices high. As farmers, the lesson you learn out here, they do not want subsidies. Although this year, so they got some big numbers. They just want to be able to sell to do what they do. As my uncle used to say, Mike, we plant corn because it's what we do in Illinois, in Indiana. We grow corn. And to be able to sell it at a fair price. So we need biofuels, all forms of biofuels, to help give us some demand, because we can't export as much anymore. So a lot of our ethanol goes to Canada. China has found other sources, and they're using genetically modified seeds. But to do that, we need to do that. So there's major incentive, and was a key theme here, is how we do it. And it's unfortunately kind of have to, or else we're going to have to just write checks for farmers or get rid of them, because it's a wonderful thing of superabundance. So I like to end with this. A lot of times in the Bloomberg chats, when markets are going down, commodity guys, so you kind of hate when markets go down, unless you're short. Most people aren't. And I like to point out how one guy put once in there oh, this market's like HE double hockey sticks. And I'm like, yeah, superabundance is like that. Imagine if it was the opposite. There's a lot of places in the world that don't have this problem. Why do we do it? Because we adopt the technology so fast. We're overdue for a drought in this country, but we'll get over that. It's just looking forward. Let's enjoy the superabundance, make the best of it, but we have to find alternative demand sources, and biofuels are top for this is the heartland of the grain belt. So it's going to come, and I just hope it does. It's how it happens is more difficult to figure out. But here's the key. I'll make a prediction. The high for corn this year was around 5. The average cost of production is $3.75. Unfortunately, crude oil just did it. Corn's probably going to do it. Unfortunately, farmers are going to get hurt until we find other ways to get more demand, and biofuels are perfect.
Okay, I think we'll leave it there. So again, thank you for everyone who takes the time to join us every Wednesday at 10. We will resume after next week. And so look forward to being in touch. If you want to follow up with Mike or myself or Vince or anyone in on the team, just shoot us an IB or send us an email. We're happy to follow up, and look forward to seeing you next time. Take care, everyone.
Goodbye. Bob, I'm going to run off. I have to do this hit. I had to ask you about First Solar, so I hope that was okay to tee you off.
No, that's great.
It's good seeing you. I gotta go. Hook